I think it's reasonable to say that 2010 is going to be a really good year for multifamily. Multifamily is back. We're through most of the recession. To the extent that the economy will still continue to be relatively slow, I think that developers and people doing acquisition are going to find opportunity in 2010 that was just not absent, not available well, in a lot of markets, rents have started to come back already. What you see in investment-grade markets, particularly in some of the close-in suburbs, for example, and urban markets in downtown New York and urban markets in Los Angeles and Seattle and some places, rent growth has actually been relatively strong. In other markets across the Midwest, sometimes in the South, they're still struggling to get any kind of rent increases. But the difference is that the levels of stability across markets have demonstrated that I think if you look at the changes in the first quarter over first quarter of last year and in the first quarter over what will happen even 2 years ago, we've really stopped the rent loss, and we're going to start seeing gains in probably by the middle of the year. There's a lot of myths out there about the capital on the sidelines. Everybody talks about how there's billions of dollars sitting on the sidelines ready to rush in and buy institutional quality assets. And I don't believe that that's true for a couple of reasons. Number one, I've spoken to a number of law firms in New York that are in the business of preparing the documents for these funds, and the vast majority of these funds are in fact shelf registrations, and they haven't raised money yet. To the extent that you talk to the people that have a lot of capital, they're being very selective about buying things that fit their portfolio. So across the spectrum, there have been a number of indicators where the percentage allocation to multifamily has increased somewhat, but the acquisitions that they're going to make are going to be very selective, and we're not going to see a huge crush of capital rushing in, making big changes in cap rates, and probably affecting the market very much in 2010. As we get into 2011 and 2012, I think that there's a very good likelihood that most of the people in the industry will go back to the way their practices were, probably in 2001, 2002, where there was an orderly transition of units being sold and units being acquired and along that scale. But mostly institutional capital has become more sophisticated than it was before. A fair amount of it's being pushed into infrastructure and other kinds of places, and I just don't think we're going to see a big difference this year.